What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. Of course, we'll check in on the broad market here. We have our core list of companies, and this week I've got an even 10 trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Some of these ideas did come from Discord members, so if you want to chat with myself and other great traders, definitely check out the links down below in the description. The Discord is there, and it's completely free. Without further ado, let's jump in. So kicking things off on the SPY weekly chart, talking about candle structure and location as we always do. And for structure, certainly a big green bodied candle, very little upper wick and even littler lower wick, if that's even a proper grammar there. Regardless, structure, completely bullish. In terms of location, also completely bullish. We made a new all-time high. As you can see, the bubble has shifted candles here. But if you just look left, again, here's your high. We're just at it, made a new one. But if we look at the prior week's range, right, this is really the important part, and do this with the range and then divide it into thirds, give or take, what you'll notice is that, yeah, sure, there is some overlap in the upper third, but again, this is number 1, this is number 2, and this is number 3. If you're in category 1, that checks out for the bulls. I mean, anything in the middle section, a little bit more neutral, as we know, right, and obviously more bearish in the lower third, right, looking for lower, but I mean, everything about this chart right now is screaming bullish. Now, does that mean that you blindly go out there and buy new longs here at the all-time highs? I wouldn't really advise it, right? And we'll take a look at some more nuance as we drill down to the daily in just a second. But from a weekly structural and location perspective, yes, the chart is bullish. In my estimation, it could use a little bit of pullback. Again, this is more subjective than objective here. A little bit of pullback and then some sort of break like that. That to me would make much more sense. It would be much more risk friendly, right? We have a place for a stop loss, we have a place for an entry, and we have targets up above. The last thing I want to do before we drill down to the daily is scrunch this up a little bit and just check in on a couple of trend lines. Firstly, the support trend line, right? We know that this one has been in play for quite some time. It's the last standing one of the support trend lines, and obviously we're above it. No big deal there. But the important one, the thing that I don't think a lot of people are necessarily talking about right now, is of course the resistance trend line, right? We talked about this in the past as well, the fact that we were just continually butting our heads up against it here, and here. But obviously as time goes by and this gets higher, we now have a little bit more room to run to the upside. So I'm not advocating that we get here this upcoming week, but it does start to become a little bit of a target if we move into blue sky territory. So just something to keep in mind, more of that longer term weekly perspective. Obviously volume is tapering off here, but let me just remind you again that if we zoom in on this section of the chart, remember, let's make that a little more pretty. There we go. Remember that in this section here, this was all increased volume due to an increase in volatility, right? Back and forth generally leads to an increase in volume. But if I scrunch this chart up just a little bit so we can get a better comparison on volume here, look at this bar, and if we make pretend, extend this to the left, it's just on par with what we would consider average as the market is grinding higher like this in here. So to me, not a big deal on the decrease in volume. Let's drill down to the daily now and talk in terms of nuanced levels. And I think what you'll notice is that we have more yellow on the screen this week than white, okay? And that obviously is indicative of gaps. So that brings me to my next point, which was, is the market moving too far, too fast? And, some people might say yes, some people might say no. I'm of the belief that the market can do whatever it wants, right? If you've watched the channel for any period of time, you basically know that we react to the market. We don't try to predict it, okay? So because we have all of this yellow on the screen, I'm basically just sort of reminding you that if we do pull back, these are your areas of interest. Every single gap here on the chart could be an area of interest. If the market wants to see a huge drop off, we talked about liquidation break in the midweek market update. I would really encourage you to watch that video. Check that out, top right-hand corner actually, just to brush up on that term. But if we see liquidation break, right, these are the targets underneath. We have the low of Friday and the gap from, what was this? That would have been Tuesday into Wednesday, right? That's around 451. So that's your first place. Anything underneath, 448.34 down to 447.57. Next gap is really just below the 50 SMA. This one, in my estimation, would really be the important one to hold because it's roughly, again, this is just an eyeball test. Let's see what it actually is with the fibs. If we come in from the low of the move, basically, let's actually come from this low all the way up to here. Yeah, would you look at that? Perfect. About a 50% retracement of this up move. Now, again, generally you like to see the 38.2 hold in terms of pullbacks, but because we have the gap here, because we have the 50 SMA and it's the 50% retracement, that would be a high area of interest in my estimation if the market pulls back. And let me be very clear about that, right? This is not a forecast that the market has to pull back. This is just saying that if we do start to see some stronger sellers emerge here at this high, then these are the areas that I would be concerned with, right? It's very simple. It's an if this, then that. If we start to see selling, okay, then I'm on the lookout for potentially here, and potentially here. The one caveat I would give to this is the fact that on Friday, we actually took out the prior day's low, right in here. And if you were watching on Friday, you know that we actually had a liquidation break. Let me just drop it down to a 15-minute chart for us for a second. You can see this was some fairly aggressive selling. This was the prior day's low, right? The fact that we took that out on aggressive selling and did not continue lower strikes me as that these people here are weak-handed sellers, right? They're really not looking for the market to completely collapse. They might have just been longs who got in very early on in the game and sold the all-time high. It's as simple as that. I think that's kind of where that selling stemmed from, and it's nothing more than, again, some people booking profits, and it happened very aggressively, okay? So all things considered, can the market go higher? Yes. If it does pull back, do we have areas to watch out for? Absolutely yes. So I hope this has sort of built the case that, you know, a pullback isn't the worst thing in the world as of right now. If the market wants to pull back, we have very obvious places where we should start to pay attention and say, okay, if we start printing hammers around here, if we start printing indecision dojis around here, anything that makes us question, right, is this pullback ending? Can we flip long over the highs and retest that all-time high? Again, what did I talk about from the weekly time frame chart, right? That to me would make sense for a risk-friendly long. Stops go here, entry is back above here, looking for blue sky territories maybe into that weekly resistance trend line. So hopefully this perspective was useful. Again, if the market pulls back, it's okay. Don't forget that we're coming off of the back of a number of days up. How many was this? 1, 2, 3, 4, 5, 6, 7. We'll call this 8 because technically we made the new all-time high on that day. So 8 days higher, the market can use a little bit of a breather, right? It's okay if we see a little bit of a pullback. So hopefully this was reassuring in the sense that if we do see some red early next week, it's not the end of the world. Let's jump on over to the QQQ for tech, of course. This one's going to be a little bit more interesting to me this week simply because we have a lot of the big tech companies reporting earnings. And obviously, if Snap was any sort of forecast here, it's not going to be so pretty, right? Snap, obviously, big move to the downside, big gap up. In terms of the QQQ chart, though, in terms of levels to pay attention to here, what you'll notice is that the structure is actually better than what we just saw in the S&P. Notice that we only have one gap underneath us, but, right, what's the sort of imbalance here? Obviously, we did not make a new all-time high. We're not quite at this area, even here towards that 382.34, okay? So there's a give and take. Obviously, the structure is better, but it's a little bit weaker just in the sense that we didn't make a new high. Is that the end of the world? Again, absolutely not. Not the end of the world here. We know that tech had more work to do. We also know that rising interest rates are hurting tech slightly in terms of decreasing future profit margins. So just things to keep in mind. The way I would think about this chart here is the fact that we have a 4-day balance, right? We have 1, 2, 3, 4 days essentially of overlapping value, something that would look like this. To me, it's as simple as over or under. If we want to take out the under levels, which would be, let's just call it here, we'll say it's at, let's grab the other tool and try that again. So we'll clear that. We'll grab the other drawing tool and try that one more time. So if we want to take out, let's just call it Friday's low, right? Around that 372.71, look for lower. You have the 50 SMA and then this bottom shelf around this 369. Okay, that's coming from resistance here. Here, very important intraday level, if you remember from when we were talking about it way back. And then the breakout point, right? This is where that was that breakaway of range happened, which really drove the S&Ps higher. If you remember, again, we talked about all this stuff in the midweek market update on Wednesday. This day was really important. So 369 is the number to watch if this wants to break down. And also in terms of range doubling rules, right? There's your range. If it doubles, perfect. Puts us right at that 369. Obviously, with earnings in the tech sector, it could completely throw a wrench in this. The Qs could gap lower. The Qs could go much lower. In that case, just like the S&Ps, all eyes are on this gap underneath. So 363 down to 360.67 cents. Okay, so you have these areas to pay attention to if the market wants to break down here. If it wants to go higher, which again, think about this in terms of pattern, right? What type of pattern is this? Bull flag pattern. If it wants to take out the highs, quick bump in the road at 379. But then after that, I think it's right back to all-time highs inside of the QQQ. What you also might remember about these highs in here is that this was a poor high, right? Technically on the market profile, we have a poor high there. So if it does get repair, we would look for much higher here inside of the QQQ. Again, does it happen all in 1 week here? Not necessarily. And again, earnings are going to throw a wrench in this thing, but these are just the thoughts and levels that I would pay attention to as we move into this upcoming week. Nextly, let's get into the, actually, you know what I want to do before we do that? We did take out the fibs on the SPY chart. What I want to do is take it out here on the QQQ. So from the high to the low of this move, obviously back up above the 61.8, which, as we know, dramatically increases the odds that we do see the 100% retracement up to the highs. And then let's go from the low of the move. We did this in the S&P, so let's be consistent here, to the high here. Notice that the 50% mark is 2-day lows. The 38.2% retracement is that 369, which we just discussed. So all of these things tie in to form nice areas of support, just things to be keeping in your sort of toolkit, okay? So now on to the IWM to wrap up our broad market here. As we know, I'll leave it zoomed out for a bit here. You can see just still inside of this. However, if we think of this in terms of thirds, just like we did the SPY weekly candle here, do something like this, we are now spending less time in the middle third and trying to get more acceptance in the upper third. So obviously that's going to be more bullish than neutral. And if we can get more acceptance above this 227, I would argue, actually, let's zoom in for a second. The breakout point is here, there we go. That's it, right? So let's go ahead and grab that other tool. You got 2-day highs from back here. Perfect retest of it on Thursday, right? So up and over 229 does put into motion the possibility for 234. And as we know, that's the top end of the weekly range that we've been stuck in for some time. I also like the fact that on the back test here, the hammer did print and we found support at the prior resistance trend line. So all things in the IWM are slightly, trying to point to a grindy move higher here. Not necessarily a big breakout. Remember that, again, if it was going to be a big breakout, should have just went here. No pullback on the break of the resistance trend line. But if it wants to be healthy, if it wants to be a nice steady move higher, so be it. That would mean more risk on type signals inside of the regular market, of course, regular, quote unquote, the S&Ps as well as the NASDAQ as the smaller caps, right? Basically signal that things are all well and good across the economy, okay? So that's how I'm thinking about IWM. Obviously to the downside, this is what you need to pay attention to. Gap from 223.70 down to 222.67, and both critical moving averages will meet at the bottom portion of that gap. Blue one is the 50 SMA, green one is the 200 SMA. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button, hit the bell button, hit the subscribe button, all that good stuff so you know every single time a new video comes out. Kicking off our companies here with Apple, I want to point out that earnings are around the corner on this one, the 28th at 4 p.m. Okay, so that's going to be on Thursday into Friday. So be aware of that, especially if you're an options trader. So number one on why you don't hold options through earnings, let's go through this quickly, is implied volatility, right? On the anticipation of the earnings announcement, implied volatility creeps up, and then as soon as that number is released post-market, IV typically drops off as there's no more anticipation, right? There's less volatility in the options contracts, and that's going to bring the value of your contracts, if they're naked, just meaning a directional call or put, right? It's going to bring it down. Even if you get the direction right on earnings, the implied volatility crush will likely hurt your position. Number two is simply going to be theta, right? Theta is constantly eating away at your position based on time. So with two things working against you and a rather binary event, right? No one can really know which way it's going to go. It just doesn't add up for a profitable or risk-friendly situation holding options, directional options, that is, through an earnings announcement. So that's my 2 cents. This is obviously going to apply to any company we look at today that has options around the corner. So let's zoom in and talk about the pattern now that that disclaimer is kind of out of the way there. This is certainly a bullish pattern, right? If we can get further consolidation here, breakout is up and over that 149.60 to get into some of our upper levels. We have 151.16, and then after that, that's really where the door opens up for that 155 move, and that to me is kind of the attractive trade here, at least from a longer term perspective on Apple. Now, if earnings throws a wrench in everything and we move lower, right, obviously it's a breakdown underneath 147, a breakdown underneath the 50 SMA, the blue line, which opens the door to here, 144.50. Now, I would be very careful around that area, not necessarily looking for lower, just based on the fact that it was a big breakout point from right here, large expansion of range on that Monday, Tuesday follow through. The rest of the week, really just a 3-day balance here. So to me, this is the area to watch if there is any sort of downdraft inside of Apple. Also, thinking about, trend perspectives, this is your low, higher low. If we were to come into here, that would be a beautiful higher low. Reasonably, it could come a little bit lower, do something like this and form a low here. But again, just based on, pure technical analysis 101, support, resistance, resistance, resistance. When back tested, should start to offer some support. So 144.50 is the downside number here inside of Apple. On earnings, anything is up for grabs in terms of levels on this chart. Next up, we'll take a look at Netflix. My goodness, screaming to the upside. Obviously, good earnings here, kept it in the flag. Very good, that happened. Just neutral day there. Even came into the support trend line and rebounded out of it. So I really like what's going on here from a trend perspective. Holding up inside of this, earnings did not blow up the chart. So I do think we are looking for upside continuation. However, let me be very clear that this, in my estimation, is not the time for new risk-friendly longs. It would be ideal if we could get a retest of the breakout point at the 640.28 and then use that as support for the next leg higher. So be on the lookout for hammers that print down here, indecision doji candles that print down here, things that make you question, right? Is this pullback ending? Can we flip long over the highs and then get back up into blue sky territories on something that's now trading plus 650? You're looking at $10 marks, $5 marks, 25s, and $50 marks. Just the big, nice psychological numbers here inside of Netflix. What I think is slightly concerning about this is the slow taper in volume, as we sort of discussed with the S&Ps. Obviously a lot of volatility here led to an increase in volume, so maybe relatively speaking, it's still elevated. But overall, you don't want to see this completely dry up. Otherwise, I would expect more of a grindy something like this, and maybe it struggles to really resolve this area in here. Anything underneath is going to be the support trend line at this point in time if we violate the breakout point at 640, and we covered blue sky levels. Next up, we have Tesla. My goodness, I gotta say, I was very skeptical of the all-time high break here. I thought it was too far, too fast, poor structure underneath. I really thought it was going to be a fake break, especially with that weakness in the broad market, but I was proven wrong, okay? So I don't get it right every single time, but that being said, I still don't believe this is the time to be a blind buyer in Tesla. Note that we now have a secondary support trend line. So this was the primary, right? This one in here. We've come off of it so far where we now have a secondary in place. So to me, I'd love to see a pullback into this prior breakout point. Again, this is like my picture perfect world, right? Scenario number one, rainbows and butterflies. Picture perfect world, pulls back into the prior breakout point, moves higher, right? That would be a phenomenal thing. Does it happen? I don't entirely know. So that's what I would watch out for to the downside. Anything underneath puts into play the potential for this gap and the support trend line. The secondary one, though, we did make a new higher high, new all-time high, obviously, as well. So the support trend line should be viable in my estimation. People wanting to get in on some of this activity here in Tesla. Obviously, the big figure to be watching out for overhead is the big bad four figures at 1,000. I mean, don't get me wrong, it's still $90 away, but the way this thing has moved recently could happen over the course of a week. Next up, we'll take a look at Alibaba, and this one is starting to wake up, honestly. And, it's not the worst structure in the world now. Granted, to the left, we still have this Swiss cheese. However, look at what's going on here, right? Nice trying to flag. So if we can get a breakout up and over 182, obviously, again, Swiss cheese in here, but the main number to watch out for is 200 to the upside. To the downside, if the flag breaks down, we get some sort of bad news out of China, that would technically be a fake break of the resistance trend line, the white dotted line, and I would just watch for a retest of the breakout point here at 169.75. Anything underneath puts the 50 SMA in play, but if this trend is going to sort of start to reverse here, ideally it does something like this, and then higher to at least get back inside of this 3-day balance, which we just put in. So Alibaba starting to shape up a little bit, starting to get more on my radar as something respectable to trade, and not so much, again, the Swiss cheese like we saw in that big fall apart from all the big regulation stuff. Next up, we have Facebook. This one does have earnings. I think it's Monday, right? So on the 25th, that is Monday after the bell at 4 p.m. So be aware of that. Obviously, with the Snapchat news, a lot of damage has already been done to this chart. That's this big gap down here. So how much more can be done? I don't entirely know. Remember that earnings are always a 50-50 shot, whether it's up or down. And, to me, it's not worth gambling on. So if we do go lower, 300 is an all eyes on level. And, everyone and their brother is watching this area. If you scrunch the chart up far enough, you can basically see big double bottom from in here. And if you extend this to the left, it was a big area of contention from in the past. So 300 has all eyes on it. I'm sure there are a ton of resting orders down here waiting to scoop up shares. So that would be my anticipated downside target in place, where I would want to get involved to the long side if there was some sort of bad news on Monday. To the upside, obviously the gap is the thing to be paying attention to. Up and over 329.50, fills up to 337.72, and after that, the 3-day balance highs are here, sort of in between ranges. Obviously, the next one is 350, but that's at 343. Okay, so earnings will throw a wrench in this one. It's not really worth doing a directional analysis on here, but I mean, certainly look at this, just kind of bearish acceptance lower as opposed to trying to work its way higher like many of the other tech companies we look at. Next up, we have NVIDIA. And zooming in on this one a bit, earnings further out, not a big deal here. Notice that we made a new all-time high but backed off. So this to me is perfect. I love to see this, basically indicating that anyone who is here trying to get the breakout took off their positions, getting out for break even or whatever it was. They had to hold through some nastiness. And now, again, that's some of these people. It's not to say that every single person that bought here did that, but that's some of those people. Now that, some selling has occurred, I would be very, very careful, not careful, but I would really be watching for it. I guess simply watching for any sort of further consolidation that happens here, then here up above 325, and boom, taking out this level brings into play blue sky territories inside of NVIDIA. I love the chart pattern. I would love to see it back off, consolidate a little bit, really, confirm that it wants to accept prices here, and then go, right? Again, we don't look for things to just do something like this and be on a straight shot up forever. It generally means that someone's going to get tired eventually, and you might not pick the best trade location or a place where there's an easy stop loss that you could identify. So to me, NVIDIA, fantastic here at the top of the range. A little bit of sideways consolidation, a little bit of pullback, fine, looking for the breakout higher. What I do want to do, because this is already starting to pull back, is just take out the fibs from the low of the move, basically the true low down here, up to the high, just get a sense for where the 38.2 is. So really could afford to pull back much deeper, but for me, the line in the sand has to be 220, the prior bottom end of the balance from in here. You can also see respected as a couple of days lows there. So 220 is kind of my line in the sand to the downside. Fibs didn't really help us out a ton, but it was worth at least looking for. Next up, we'll take a look at Microsoft, and this one again, new all-time high, really just a 4-day consolidation after the break of the prior high. So again, even more strength than what we just saw in NVIDIA. To me, if we want to remain in this range, fine. Healthy consolidation happens here. Breakout up and over 311, blue sky territories, $1.50, intraday levels that do form. If we take out the 305.50, prior all-time high from in here, right? It's simply back down to the next level at $300, nice psychological mark, as well as prior midpoint, mid-ish point of the range there. Resistance and support from this little pullback before ultimately higher into this past week here. Earnings on this one are again around the corner, just like Facebook. However, this is on the 26th, so that is going to be on the Tuesday, and it's after the bell. Okay, so keep that in mind. We'll throw a wrench in any directional analysis we just did. Remember, same thing, don't hold options through it. Could be up, could be down, 50-50 shot here, but these are the levels to roughly pay attention to in the case of a move lower, right? These really would be the areas where you start to be interested in longs if it comes down into any of these marks. And last but not least, we have Amazon the Beast here. And zooming in, you can certainly see big fake breakout here, and Friday complete fall apart to the downside. Not entirely sure if that was linked to the whole snap thing or if there was separate news. Didn't really dig into it too much. However, it's kind of concerning, honestly. This was an obvious resistance, right? I'm sure a lot of technicians, people who pay attention to charts, could see this. We started to get solid acceptance outside of the resistance trend line, and to just fall apart and come back down underneath, not that attractive. So to me, if it does want to bounce anywhere, should be here 33.10, anything underneath. This isn't the strongest support. Notice that it's just a double bottom. I would actually expect that to break at 32.36. So if we do get down here, just start to be careful around this area. This is ultimately the line in the sand to the downside at 31.80, noting that earnings are going to be on the 28th after the market closes. So again, that is going to be on a Thursday. Keep that in mind. And the same thing holds true with your options. Okay, don't hold it through. If there is any sort of pre-earnings run-up, then obviously a move back into this flag will be critical, and 3,400, there, is going to be the all eyes on level. That to me is the big number to beat if it wants to move higher. If we can't get back up over 3,400, then to me, kind of hands off here inside of Amazon. Quick reminder to hit the bell button, hit the thumbs up button, hit the subscribe button, hit every single button that's down there, and let's get right into these trade ideas. You know the drill. So jumping into AMD, again, earnings are around the corner. They're on the 26th after the bell, I believe here. Yep, 4 o'clock after the bell. So again, this can throw a wrench in the pattern here. However, I like the fact that we're coming into the all-time high and kind of backing off. So to me, healthy consolidation happens here. Breakout puts into play blue sky territories inside of AMD. I really love the way that we've come to where we are at. Instead of like the S&Ps where the structure is concerning, we have a resting day here. We have a 2-day balance in here, and then a breakout, which led to a little bit of pullback with the broad market on Friday. So the structure isn't really concerning here. Remember that earnings can throw a wrench in this. So only really pursue this idea if if it wants to be respectful and play nicely in this range and then give us the break, right? If it's a big gap down, you're obviously not going to look for a big reversal back up into those all-time highs. Next up, we're going to take a look at Citi, and I will just point out that the financial sector has been on fire here, and this one has basically given us a number of fake breakouts all along this resistance trend line. But if we look at what the rest of the banking sector is doing, so you can pull up a chart on Morgan Stanley, Wells Fargo, Goldman Sachs, any of those guys, they're trading at their highs, and Citi is still far underneath. So a break here, again, is going to put back into play the 74.57, looking left, poor structure in there, so we should move through it, not easily, but with relative ease, as opposed to trying to resolve a big choppy area like this, right? Coming up from the bottom into here, a lot of overhead supply. With what's going on here, wouldn't really expect the same thing. So I'm not saying all-time highs are back on the table here inside of Citi. However, I would just be looking for this to sort of catch up to its partners in the banking space potentially. So, a little bit of an opportunity here inside of Citi. Not so interested, obviously, if there's never a break of the resistance trendline. Earnings are not an issue here. Next up, we have SLB for Schlumberger, and coming in quite simply, one of my favorite patterns ever, just a simple balance area, right? So you have over and under levels, up and over 34.75 basically takes us into 36.24, the prior shelf of highs in here. After that, monitoring for continuation. If it does want to drop lower, then basically look at this, right? We have 31.63 as the downside support. Earnings are out of the way on this one, so no big deal there. In terms of range doubling rules, right, works perfectly to the upside or close to perfectly, and not so much to the downside. So be a little bit careful if the play is lower here inside of SLB, but simple over and under levels there. Next up, we have AA for Alcoa aluminum here, and again, earnings are out of the way, but you'll note on earnings, we had a big gap higher, big expansion of range higher. We made a new higher high, and we're now aggressively pulling back into this support trend line. Note also that it's coinciding with the 50 SMA, the blue line there. So starting to be on the lookout for hammer candles that print any sort of reversals basically here to first take us to this, so 52.21, prior shelf of resistance here and here, also a bit of support there. And then after that, obviously the highs are back on the table. So seeing if we can get uptrend continuation here inside of AA, stop loss goes under the lows in this instance. If it just wants to break down right through the support trend line, then obviously it's not any longer in play to the upside. So that's AA. Next up is CVS, and earnings are around the corner on this one, but if it's a little bit further out, okay, so in November, so not a big deal for this week. And if we can get a pre-anticipatory run-up into earnings, then look at this, perfect pressure cooker top, 1, 2, 3 touches here to 87.55. If it breaks, highs are back on the table at 90.60. Anything above that is blue sky territories, whole and half dollars, intraday levels that do form. For me, it would have to be a break up and over this level. Not interested in the trade if it just wants to, do something like this underneath and never really give us a definitive break up and over that 87.55. Next up is going to be ARK Invest, of course, and this is the innovation ETF. Obviously, earnings across big tech companies will have an impact in this name, but what I like about it is the fact that this resistance trend line is being tested here. So if we can remain high and tight, put in some sort of bull flag like this, then look for a break here to fill up the triangle. As we know, that brings into play 125.89, and then these highs in here at 130.74. That could potentially be on the table for this upcoming week, but looking left after that, big void in the chart up here, up towards that 140, up to 143. Again, not advocating that it does this all in one go, but just noting that there is an opportunity overhead if we can break this resistance trend line here inside of ARK. Next up is Upstart. And this is a pullback play. So if we look at this chart, obviously coming into this prior high here, earnings are further out, so not a big deal. If it wants to reverse here, what's the play, right? Back up to the highs. See if it can do something exactly like what it did back here. Notice that we had this, right? So there was your breakout point, broke, retest, higher. What do we get here, right? So here's your point. Broke, retest, are we going to go higher is the question to be thinking about here inside of Upstart. Obviously not so interested in the long trade if we want to break down firmly underneath that 341-ish area. Note that if that does happen and then we get a bounce, that's probably not a time to go long. Note what I just drew here, right? Head and shoulders, breakdown point is here. For lower, obviously that would take some time to resolve, but earnings are there as well if it does take that time to resolve. So thinking about a potential play if early on in the week it wants to resolve to the upside here at 341. Next up we have Starbucks, and this is a simple pressure cooker top starting to be a bit of a rounded bottom, right? So something like this. And again, earnings are on this one around the corner. They are going to be on the 28th. So again, that's the Thursday after the bell, but earlier on in the week, could we see a pre-anticipatory break of this 115, we'll call it for round number's sake? Note that the target is here, not a whole lot of candle structure there, should move there with relative ease to 117, then big gap overhead. So 117 up to 118.37 could be in play this week. Obviously not interested in the trade if it never takes out that 115 to the upside. Next, we have CrowdStrike, and CrowdStrike is forming a beautiful bullish flag. If we do something like this, you can certainly see nice high and tight consolidation, even splitting it in half. This past week was spent in the upper 50% of this range. So if we can get a break, blue sky territories are on the table. Obviously, earnings are much further out on this one, closer to December, so no cause for concern there. If it does want to break down, again, staying inside of this range is okay. Eventually, we would want to see it do this again and then go. If it really takes out this area here at the 271, not so interested in this to the long side on the CrowdStrike play. Next and lastly, we have SunPower. And SunPower is a bit of a longer term idea. Okay, so if I scrunch up this chart, let's grab the hand tool. There we go. If I do something like this, just so we can sort of look at it in a better light. So this to me is a big shelf of support. You could technically classify it as a big double bottom, right? Something like this. And on a double bottom, we know that the neckline is here. So I'm treating that as more of a zone. If this zone gives, looking left, the next major area to pay attention to is up here at 38. The way we're coming into this is fairly respectable, right? Nice flag here as well. Earnings could throw a wrench in this, but if you're treating this as a longer term idea, then maybe you just look at this as well as a cup. And if something goes awry on earnings, we put in some sort of handle, right? Doing something like this, a reattempt here, top of the cup, basically takes us higher once again into that 38. So thinking about this in terms of a longer term idea inside of SunPower, obviously, buy the time on the options if you are going to trade this with options. If you're doing it with shares, not as big of a deal. That's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is now linked down below in the description. A couple of analysis over on that channel a day. And all of that being said, I wish you a green trading week.